All right, what's up, folks? Welcome back. Crypto Report, June 5th, 2025, Thursday. Joined by our co host, the crypto guru, Josh. What's up?
Morning. What's going on?
Well, I'll tell you what's not going on. Bitcoin is not at 150 yet, so let's go ahead and talk about it. There's a lot of concern right now, and I'll be the first to admit it's exhausting talking to people sometimes. Well, actually, not sometimes. About 99% of the times, it's exhausting talking to people because the expectations for these assets is just so completely overblown in the short term that it just drives me fucking insane. For example, Bitcoin, as you pointed out right before we went live, Bitcoin was up nearly 50% in a month, 5 weeks, 50% move in Bitcoin's value. And instead of people being like, okay, it makes sense for this thing to maybe pull back a little bit or consolidate a little bit or whatever, people are all of a sudden doubting the fact that Bitcoin can't continue to run towards that 150 to 160 interim PT because for the last couple of days, Bitcoin has pulled back slightly. What do you have to say about that?
If Bitcoin isn't in up only mode, people are complaining. And the craziest part is that I would say 80% of folks who have crypto exposure aren't even holding a substantial amount of Bitcoin. Like, the reason people are upset, people are getting antsy, is because their portfolio is 80% altcoins, and then maybe 20%, majors like Bitcoin, Ethereum, Solana. And so when Bitcoin chops like this, the rest of the market typically, sees a lot of blood. And we've seen a lot of altcoins give back all of their gains since the April 7th lows. And so people are hurting because they're not holding the king. And we can talk about Bitcoin dominance, we can talk about total crypto market cap. I don't know why folks wouldn't be holding at least Ethereum or Solana in market conditions like this. And so, Bitcoin's at $104,000. People are upset. It doesn't make any sense.
Really doesn't.
It's going so much higher.
Let's talk about Bitcoin dominance in a second, because I think you're the king on that. You bring it up all the time, at least to me, and I think it makes total sense. But before we do so, I do want to talk really quick that unfortunately, I don't know if it's a symptom of TikTok brain rot or what, but people get so upset when high volatility assets, all of a sudden, that volatility that is so beautiful on the way up starts to work against them on the way down or even consolidates. It's like, well, I think one of the greatest edges today in the market is the fact that most people can't sit through a 30-second video without feeling uncomfortable. The fact that if you can just develop a process that involves patience, the fact that you can outperform probably 95% of the market just by simply buying a leading stock or asset, in this case Bitcoin, and then just fucking off and like literally just waiting, is incredible, because the market hasn't always been like this. There's so many hands in the market right now, particularly from the institutional side, that are accumulating this stuff, pushing primary trends up. And if you can just not fucking stare on a minute-to-minute basis about Bitcoin or any of these assets, you're probably going to outperform everybody else that does. Am I wrong for saying that?
No, absolutely not. And like we just said, it ran 50% in 2 weeks. Like, some level of cooling off is to be expected. People think it's just going to go from 76K to $300,000 per Bitcoin in a 1 month time frame. That's just not the reality. And so, you have institutions pushing primary trends higher. People are just impatient. That's the fact of the matter. Like you said, it's the TikTok brain rot, and it's killing everyone who's trading.
Way I look at this, Bitcoin is in a primary uptrend after breaking out of a multi-year cyclical bear market above above 70,000. People were saying that once we hit 100K, we were coming back. That was the top. Pulling back, we were going to break 70K and head back down to like 50 or 40 or 30 or whatever like shit they were talking. It doesn't make any sense from a market structure standpoint. You follow basic technical analysis. These breakouts typically do not fade over the course of a couple of weeks or months, and that's what they were calling for. And lo and behold, market bottomed on April 7th, and Bitcoin ripped 50% because we're in a bull market, folks, and primary trends are up. So before thinking this asset is dead, expand your time horizon a little bit, hunker down during consolidation points, potentially even add in during some of those, and wait for the bigger move to the upside over the next coming weeks, months, or I don't know how long, years maybe, I don't know. Interim PT though, at least for me, is that 150 to 160 range, that 2.618 fib extension up here at 158. And before we get into Bitcoin dominance, I want to point out IBIT tracks it almost perfectly, right? So if you're looking to trade this from a TradFi market standpoint, I have substantial amount of exposure in IBIT. I'll tell you one thing. With the availability of options contracts on IBIT, it's almost better. I live in Brazil, and so I have access to brokerages that allow you to trade a lot of leverage on Bitcoin. And, I've been doing that for over 10 years now. And it's almost more efficient just to trade the options contracts on these TradFi products than it is to go on to brokerages and run, 5 or 10x isolated leverage for one reason alone. And you can probably back me up on this, Josh. Isolated leverage offers a liquidation point, meaning if price drops even for 1 second below your lick price, you're completely out of a position. Options contracts do not. They might deteriorate in value, but they always exist as long as there's expiration still left. And what we see frequently are liquidity drawdowns in an asset. You get a quick wick to the downside, stopping everybody out, and then prices right back up. Don't have to worry about that if you're trading options on a TradFi product. Am I crazy for saying that?
No, that makes total sense. I mean, you can just look at the drama that's been crypto Twitter over the last 2 weeks with, this individual James Wynn, not to give him any more air, opening what is essentially a notional $1 billion long, right? I think 20 million or 10 million on 40x leverage. He continued to add money in. He got he got hunted by the market makers. He got liquidated like 9 times back to back. He had a P&L of over $100 million, and now he zeroed out and is asking people for donations. And so you can't. That doesn't happen at options. You can buy a shit ton of IBIT calls, or even Deribit options for on-chain kind of Bitcoin calls, not going through the traditional market, and not have that risk. So, I think for the average participant, the IBIT options make way more sense, and quite frankly, way less stressful, because even with the deterioration because of theta on the IBIT, if you have a leverage long 10x with any decent notional size, you're also paying the funding rates, which can vary dramatically depending on the volatility of the asset and the volume of those futures.
It eats into your profits.
Exactly. And so, IBIT or even the Deribit options, I think make a lot of sense. But I think a lot of people are just scared. At least a lot of people in crypto, I'll say, not necessarily TTI members. But a lot of folks are scared of options and don't understand the Greeks, and so they just, leverage is easy, right? You hit the thing to 50x, you know what you're making if Bitcoin goes to 150K, and then you can dream about that Lambo. But in most cases, it fails horribly for most.
And just to point this out, Bitcoin went up 45-50%, IBIT went up 45-50%. So there really is a pretty true one-to-one correlation between IBIT and Bitcoin. So it's not like, in the past, it used to be that BTC was the king to own. You would just trade that. There were things that were correlated but might not have moved the same as Bitcoin. We still have those, right? Hood and to a lesser and MicroStrategy and to a lesser extent Coinbase. Those are all correlated with Bitcoin, but those unironically move more than Bitcoin. So if you're just looking for a truer one-to-one-ish correlation between Bitcoin and a TradFi product, IBIT is the way to go. I'm in IBIT. I have a lot of IBIT going out into 2026. I think Bitcoin's move is not over. I think it's actually just starting. I think people have TikTok brain rot, and we're going to continue to rally higher here. I want to talk Bitcoin dominance, but I want you to talk it, not me. Why does this matter? What is it telling us? And what are the expectations for altcoins while this ratio continues to press higher?
Well, if I could pause for 1 second, just finish on a note on Bitcoin. So I will make I'm not bearish on Bitcoin. I think everyone who listens to this is well aware of that. But a lot of similarities in price action to the 2021 top, right? We only did, a 50% move, 55% move off of the previous all-time high, which is pretty uncharacteristic of Bitcoin. Typically, we're seeing, more than a 2x off the top, and that's with, depreciation over time in terms of reduced gains. But we are kind of seeing that, we hit 108, massive pullback, mini bear market because of, what folks want to call the Trump slump. and then run back up. So something to keep in mind. Obviously, we're going to be watching, and I think you and I both think this is going much higher, but I can understand the comments.
I want to interject there just for, and I'm not necessarily saying you're wrong, but let me interject here. It's not from a Bitcoin standpoint, but from a total market cycle standpoint, I think one of the pitfalls of taking fractals, and by fractals I mean pieces of price action. So if you're looking at the screen here and we just like say, hey, this looks awfully similar to this, or something where you take something back, go through it. You see this on Twitter all the time. You see fucking dildos grabbing like the Dow Jones price fractals in the 1950s, and they're like, look what happened, and it's happening again. I'm like, dude, first off, the environment's completely different, and where we are within the market cycle is completely different. The reason why I bring it up is the 2021 high is abnormal. Even you said it, right? It was abnormal to see Bitcoin only go up X amount. I want to point out that generally bull markets run between 3 to 5 years before there's a bear market. The bear market of the COVID drawdown into the V-shaped recovery, everything was expedited. A huge liquidity breakout, and asset prices, like obviously all that liquidity entered the market. And so everything just went twice as fast. So realistically, the bull market started in like April or May of 2020 following the March bottom, and it lasted until November, December of 2021. So that was like a year and a half, maybe a little bit more than that of a bull market. Then we had the 2022 bear market. We had a 10-month bear market, which unironically within a secular bull cycle is pretty goddamn long. We also saw the most important assets in the market, like Nvidia, lose anywhere between 50 to 75% of their market cap, and the bears were still saying shit was overvalued because they have a mental illness. So I just want to point this out. When people go, watch out, the price action is oddly similar to 2021, I would refute that and say, think about the circumstances that we were trading within in 2021. Everything was way faster, all of this huge influx of capital. We had just come off of one of the fastest market breakdowns in history with the COVID crash. And, I don't want to get too far into this, but if you go back to 2019, we were already trending down. If you look at your risk ratios, which inside of TTI, you should know what I'm talking about. You're looking at like your consumer discretionary against your consumer staple. You're looking at your high yield corporate debt against your intermediate treasuries. You're looking at like things like SPY versus gold. These were already telling you that prior to the COVID crash, something was wrong. Bonds were signaling something was wrong. And then we got the COVID crash. So we were arguably already headed towards a potential bear market coming into the 2020s. We got the COVID crash, we got the huge injection of capital, and so risk assets were inflated like crazy for a year and a half. So I would say that it's very difficult to take a price fractal from that corridor, that like 1.5 to 2 year corridor, and think that anything is similar to that. I don't think we're going to get that. I think right now we're in more of a normal market cycle where we just had the 2022 bear market, which once again, risk assets shed 50 to 75% of their fucking market cap, and now we have a very more normal bull market going on right now. People want to pretend it's a bubble. I don't really see the bubble yet. Not saying it can't be a bubble, but not yet. So I don't think that Bitcoin is topping out here. As a matter of fact, I will publicly refute that claim 100 times over. I am very bullish in Bitcoin. I'm very bullish in risk assets in general. I don't think we're rolling over here. I think the February through April drawdown was the correction the market needed to rocket higher through the summer. And I think that usual summer weakness we see in risk assets just got front loaded into Q1. That's it. I think we're going to rip higher through summer. People are going to be asleep, and I'm happy to see it. I'm going to make fun of everybody when it happens. So let's talk Bitcoin dominance really quick. What does this mean for alt assets when Bitcoin dominance continues to run?
I mean, all great points, and I agree. You know how bullish I am on Bitcoin.
I know you are.
I know. That one thought from folks. And this cycle has been very different, and I'm the same way. I expect to go much higher. All right, Bitcoin dominance.
Really quick, I want your opinion on this. Every market cycle has like a new thing. We had ICOs back in 2017, 2018. I don't remember we had NFTs like the last cycle. What's this cycle? What is it? Is it the stablecoin IPO? Is it the Circle IPO that's happening today? Like, what's this theme or this cycle's theme?
Well, the last 2 years' theme has been pump fun, right? It has been that anyone can launch a coin. It's gone from, let's say, 10,000 to, or a few thousand coins in the crypto ecosystem in 2021, and even less in 2018, 2017, 2019, to now there are thousands of coins being launched by random scammers, but random people every day. So now it's just mass dilution of attention.
So that's such a boring theme for this cycle. Pump fun, like, come on.
It's arguably, I mean, a bunch of stats have come out for Pump Fund, and for folks who are actually trading on that platform, 5 wallets have made more than
I
$50,000
saw
per
I
month.
saw that chart earlier today, this morning.
And
That's
I
hilarious.
mean, you can trade on other platforms, and that number is obviously very deflated compared to the real number. But it's just what a shitty key aspect of the cycle. And hopefully, I think we're moving away from that. I know, Side note, markets kind of pulled back because Pump Fund announced they're going to be doing an ICO, and they're going to raise $1 billion in public round with a $4 billion valuation. And so folks are thinking of that the same way that the Trump and Melania coin happened, and it's going to be a massive liquidity suck. So on that news, every essentially not Bitcoin or Ethereum, but every altcoin dumps, 2 to 20% as people sold to get cash shored up and ready to buy this ICO that's coming up. So it really is the be all end all of Pump Fund.
All right, I don't want to keep derailing you. Go ahead. What's up with Bitcoin dominance here?
So yeah, we've talked about this nearly every week that we spoke. I have mixed feelings on Bitcoin dominance, but essentially what it tells us is Bitcoin's dominance in the market. And typically when this is trending higher, altcoins aren't outperforming, right? Ethereum isn't outperforming. We saw this massive drop off on Ethereum's overperformance, the lows of April going into May. And that's when we saw a lot of these altcoins run, many of which I'm still holding that are in profit, some of which are also have been cut or are out of profit. And it just kind of shows the dominance of Bitcoin. The reason I like it is it gives you an idea of where the market's going. This chart's going higher.
That's where the liquidity is going in the crypto class, right? I mean, as long as this continues to move up, a majority of the inflows of capital and liquidity into the asset class are going to Bitcoin. It's that simple.
Exactly. Now the point that I don't fully rely on BTC.D as a proxy for my own trading, as an example, or sometimes even in TTI, is because of the integration of these spot ETF products for Bitcoin around the world. Right? The idea over the last, call it 2 to 3 cycles, has been Bitcoin puts a new all-time high. It runs money and wealth. The wealth transfer from Bitcoin all-time highs flows into Ethereum and the majors, Solana, BNB, XRP, you name it. Those run up, and we had this trickle-down effect. That money flows into the large caps, flows into mid caps, flows into small caps, flows back into Bitcoin. And that's how market cycles have typically been for crypto. With these spot ETFs, a pension fund buying Bitcoin for 401ks isn't going to be rotating that money into Doge.
Yeah, it's a great point.
That money's not rotating in XRP.
It's not going to rotate anywhere. It's going to rotate back into dollars when people want to redeem it.
Exactly. And so, I think one thing people have to consider with the Bitcoin dominance, because a lot of folks rely on this as their indicator for an altcoin season, is that I think this is going to grind higher forever, essentially. We will get some deep pullbacks and things of that nature, especially in, the next bear market. But because of those passive flows, like we're seeing anywhere from $50 to $400 million a day in passive buys in spot ETFs. And the altcoin market total makes up, excluding Bitcoin, is $844 billion. The constant pressure to buy Bitcoin is going to push this higher, and so.
So what's a better chart? I know there's a couple of them that you look at. What's a better chart to have like a better idea of we'll just like blanket statement altcoin season? What do you prefer?
I mean, if you want to include Ethereum in there, you can also just look at Total 2. But, Total 3 or others is a good, it's one that we always look at, right? It shows how those assets are doing relative to the entire market, kind of as an index. So when you see those key, Total 3, others, Total 2, breaking key levels or breaking all-time highs, that's indicative of an altcoin market.
Yeah, we've talked about this in the past a couple of times. You can see that I put little markers on the chart. When we're up here, this means that we're nowhere close. We're nowhere close to these breakout levels. So it just continues. You're right. I mean, it just continues to tell you that Bitcoin's the main attraction here. And so for those people that are looking to like accumulate these hidden gems, are going out onto sketchy brokerages and stuff. And listen, I'm not telling you not to do it, but I'll tell you right now, there's nowhere else in any market where you're going to take $50 and turn it into $5,000 or whatever in a week ever. Nowhere except the crypto market. So I'm not telling you to don't do that. And by the way, when the time comes, we'll be in there too. Thank you, Josh. But without charts like this agreeing with that assumption, I think you're better off spending your time elsewhere, accumulating Bitcoin or trading other assets, because you're right. The money isn't flowing into these at all right now.
Well, I think so. I mean, one chart if you want to pull up, you can just pull up, either others or total three, whichever one you prefer.
There we go. I got others up, and I got the little alt season thing. Yeah, we're nowhere close yet.
Yeah. Okay, but here's the thing: pull up others and then slash BTC, so you kind of see that correlation. It's very different this cycle from what the market is used to. It is down only.
Yeah.
And so we talked about this in a private chat with some of the folks in TTI, and what it really comes down to is these are obviously Ethers is an index for all crypto assets, and a lot of assets from 2017, 2019, 2020, 2022, they're dead. They haven't done anything for 5 years, 10 years, and so that's kind of holding. That is having a factor on these assets. So I agree that it's like hold majors, hold.
Is there a ticker where it's like the 11th through the 50th market cap or something like that? So you're right. We get rid of all of the shit that like arguably will never pump again or will never have any sort of meaningful move. Because if others is taking into there's coins going back to 2017 that are still listed that have like fucking nothing. It will never happen again. But I'm sure they're weighing on stuff like this, right? So is there any way to like strip those? Is there a ticker on TradingView that I don't know. I've never even thought about doing this, but
I think there is. I think even Coinbase put out what they called S&P 50, which is like the top 50 coins, kind of give you a better idea. I'll have to look into that to see. But I mean, the point. I don't know if you pulled up others / Bitcoin.
I did. It's up right now.
You look up the two previous runs. You see the massive outperformance by others versus Bitcoin since call it August 2023 when things started kind of kicking off. When Mike and I first bought Pepe, it's been essentially down only. And I think a key factor is this is an index, right? Like we just said for others, it holds everything that's been in existence that has some level of market cap in it. And so there is still the opportunity for people who are, stock pickers, asset pickers. In this period of time, you've had multiple assets, those of which we've traded in the last month, go up several 100%. Farcoin's on a massive pullback, but we call that at with 37, 40, 50 cents. It ran to $1.60. And so I think the two key things here are own Bitcoin and probably some Ethereum based on the relative strength, but also own things with relative strength, right? You can chart individual assets against total three, against others, and see how they're performing based on their peers, or chart it against Bitcoin and look for local bottoms and try to buy those, or chart it against any level of asset that you want to prove its relative strength, because there are definitely assets to trade right now, even in downturns, where you can still make a lot of money in the crypto market. So I'm not advocating for anyone to leave, because I think when you leave the market, that's when you miss the best stuff.
I'll tell you right now, is there a harder job right now than a crypto influencer that writes reports to like the older folks like me? And it's like every day, it's like Bitcoin's back, we're going all-time highs, and then it pulls back 5%, and then the next newsletter, fucking potentially even same day, it's like watch out for a pullback in Bitcoin. It's got to be so goddamn exhausting to have to explain to people that volatile assets are volatile. Like, man, I'm glad you do it. I do not have the heart to do it anymore. I don't, I love trading this stuff. I like looking at it. I like talking about it, but trying to keep people informed and telling people potentially why things are happening is a losing battle for me. I'm glad you do it. That's all I'm going to say. Let's talk really quick about Ethereum, because you mentioned it. Ethereum is an asset that is worth owning right now on a relative basis. On an absolute basis, we're building a beautiful base on top of an upward sloping 200-day moving average. We do have a bullish momentum regime that just started back at the beginning of May here. So we want to continue to own Ethereum. One thing to point out, which we'll look at in a second when we look at ETH BTC chart, is that while Bitcoin has pulled back, Ethereum has gone sideways. That is called relative strength, folks, and that is arguably one of the most important things that you could possibly look for in a market where you're trying to buy assets that are potentially going to outperform everything else. Particularly amongst the majors. Josh and I have had this conversation plenty of times over the last 4 weeks. What types of coins do we want to own out of the blue chip, quote unquote blue chip cryptos? I'm talking Bitcoin, Ethereum, Ripple, Solana, BNB, etc. Ethereum arguably continues to come up as the best one. Not only is it super hyper liquid, you could also own it as a TradFi product through ticker ETHA, which is what I own. Like IBIT, it tracks Ethereum almost to a 1-to-1. I love the fact that it's building this base here. Once again, IBIT pulling back, Ethereum going sideways, and Bitcoin pulling back, Ethereum going sideways. I think that when the market begins to press higher, Ethereum will outperform, and it all comes back to this chart here with Ethereum versus Bitcoin. Give me 1 second to talk through this, and then Josh, final words here. But last time we were down at these levels was back in 2019 through 2020, and we started to rally, and then over the course of almost 2 years, Ethereum outperformed Bitcoin by 400%, a little bit more than that actually. And I think that's super important because people that trade Bitcoin generally trade Bitcoin because it's Bitcoin. That's the name, and I totally understand. But if you're a trader, if you trade, if that's what your goal is to make dollars or whatever currency you're spending in, you want to own the asset that goes up against everything else at a quicker rate. And as of right now, if you go back to 2020 through the end of 2021, Bitcoin got all the headlines, all-time highs. Bitcoin's at 70K, blah, 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 blah. Very rarely did you see headlines like Ethereum's at 3K or Ethereum's at 4K because the Bitcoin was at 70. But here's the deal. Ethereum went from 140 to 4,000. Hello? You made 400% more on your trade on Ethereum than Bitcoin. So once again, if you're looking to own the strongest asset, it's not yet proven it, but we're carving out this local bottom here. I think, and I don't know how long this is going to last. If it's a 2-year run, we are in at the fucking bottom. So hopefully that's the case. But, there is an argument to be made right now that you should be positioning yourself in Ethereum because it certainly looks like it has an opportunity to outperform Bitcoin over, the next couple of months, quarters, potentially years. Last time it happened, it lasted years. So final words on this, Josh? Am I crazy?
No, I couldn't agree more. You know I'm a big Ethereum bull, especially right now. It's held such an incredibly tight range, from essentially 2450 wicks up to 2700 throughout this entire kind of consolidation with Bitcoin after its run to 113. Whereas, look at Solana, massive pullback. A lot of majors, nevertheless, altcoins have given up essentially all of their gains that they've seen grabbed in the last 2 months now. And so that relative strength is important for people to realize. You have a lot of things coming together. Like you said, the ETH BTC chart, it looks like we really tagged the bottom within hours perfectly, thanks to the crypto report we were chatting. On the USD pair, it's sitting just below the 200-day moving average. It's sitting just below that kind of key level at 28.75, 29.50 area. And yeah, I agree. As soon as Bitcoin makes kind of that next move up, I think we're going to see some massive moves from Ethereum. Even if they're going 1-for-1 on par, they're both putting in 5% days. That's okay too. Obviously, we want to see the ETH BTC ratio start to explode a bit, but
we already are starting to see it. I think it's important. I do also want to point out that if Bitcoin, let's say Bitcoin closes down on the day 5%, which would be totally normal given the volatility on the asset, and Ethereum closes down 3%, people are going to go, oh man, fuck, Ethereum is down. But that ETH BTC ratio is going to continue to go up and to the right because it's still outperforming Bitcoin, right? So it's important to understand just because Ethereum BTC ratio is going up doesn't mean Ethereum is going to go up every day. It just means that it's going to go up more than Bitcoin or come down less than Bitcoin. It's going to be stronger on a relative basis, and that should, I always say this, I say it every single day in some capacity, relative strength almost always leads to absolute strength. If you can key in on the assets that are outperforming the broader basket of assets that you're comparing it to, that will almost always translate to better absolute performance over time. Always. There's a reason why, and I don't need to know the reason why. You don't need to know the reason why Ethereum is not being sold here. I have no fucking idea, but it isn't. And that is a key clue when you're thinking about positioning and how much you want to put into an asset and setting your expectations for performance. If you expect Ethereum to outperform Bitcoin and over the next 3 to 6 weeks, it doesn't. Maybe it's time to cut some of that Ethereum exposure and either sit on it or roll it back into Bitcoin, but I don't think that's going to happen. We're seeing it right now. I think this continues, for our sake in TTI, I hope it continues for the next 2 years because we have end of 2025 exposure. It's already free, by the way, for those of you in TTI. We bought we bought Ethereum like fucking here. And so the contracts are already free, the September contracts, and then we opened up some December as well, I believe, for 2025. So I mean, I fully expect Ethereum to be bullish through the end of the year. I think it's going to outperform Bitcoin. My money's there. If I'm wrong, I'm going to lose some money. If I'm right, I'm going to make a lot of money. So that's the way, that's what I like.
And I would add that, with the ETH that we were talking about, we're actually seeing for the first time in a long time, pretty massive relative to Ethereum, daily buys from institutions, from Wall Street. From the last 3 months, we've had just shy of $600 million pumped into ETH. Whereas prior to that, we've only really seen outflows, to the tune of $500 million. And so, we're now seeing consistently 30 to 100, 150-ish $1 million in net new buys on a daily basis. And that's something to watch, right? As that kind of picks up steam and as additional products like BlackRock is pushing a staked ETF where you'll actually get some form of dividend from them staking Ethereum coming out, that might increase, institutional ownership and see kind of that adoption to some reduced extent to, as Bitcoin.
100% agree, and I'm ready for it. My wallet's ready for it. Let's make a bunch of money. Josh, it's been great. Appreciate you. Folks, if you have any questions regarding anything we went over and you're inside of TTI, feel free to leave it as a comment below on the as I post this in about 5 minutes. Josh or I will get back to you as soon as we can. Josh, it's always a blast. Thank you so much.
My pleasure.
Catch you guys next Thursday, same time for the Crypto Report.